what's going on, everybody? It is Monday, December 6th. How you doing? So, a big bounce in the market today. Folks, if you go back and if you listen to my video, I believe it was last Thursday, and I think even the title of the video said, we're just waiting on Congress now for the continuing resolution. All right, I said everything was in place for a big market rally, but we needed Congress to pass a funding bill, because that, if they didn't, that would have had, I think, serious negative impact on the fiscal flows, but they did. The late Thursday, early Friday, when Biden signed the thing, Friday was the bottom of the market and we rallied. So I said, we're just waiting on that continuing resolution. And when that happened, as a matter of fact, all day Friday, I was sending out emails to my subscribers saying, buy this dip, buy this dip, buy this dip. I have taken a lot of effort to try to educate you on, Fed policy and how irrelevant it really is with regard to the stock market and the economy. And hopefully that has given some of you an edge over people who react to the news headlines emotionally and don't really understand what is going on. I explained taper, how taper actually is kind of humorous, because everyone who's worried about taper now being like the Fed taking away the punch bowl, so to speak, or monetary tightening, they don't understand that taper is literally the government now sending checks to the economy as opposed to sending checks to the Fed. Okay, when the Fed leaves those securities, those interest earning securities in the economy, the government pays interest into the economy as opposed to paying it to the Fed, where the Fed just takes that money, it goes nowhere, and it just hands it back to the Treasury at the end of the year. It's this ridiculous back and forth game that's meaningless. And I said that everyone who was up in arms and so outraged when the Fed, when the government was sending out stimulus checks to people, and they were saying, "Oh, it's going to create inflation, and that's terrible, and you shouldn't be doing that." These are the same people right now saying that, "Oh, this is going to be, a tightening, and it's gonna slow the economy down." When in fact, what it is the exact same thing. It's the government sending checks to the economy. They just don't understand. That's number one. So it is not a tightening. Number two, I try to put into context or explain to you how irrelevant it is to get all freaked out about interest rate policy, because, nowadays, if you look around the world at the major economies, you're talking about basically interest rates at zero. I mean, in some places they're negative. In Japan, they're negative. In Europe, they're negative. All right? We're not talking about basket case countries like Venezuela or Turkey. And Turkey actually is not a basket case country. Like, I've been there recently. At least I was at the airport in Istanbul. And I can tell you that that airport would put to shame most of the big airports here in the United States. Really. I mean, Turkey's problems, if you want to call it that, were self-created, all right, and also through a lack of understanding of the monetary system, but that is pervasive through mainstream economics. When we're talking about the United States, let's assume these FOMC people like Charles Bullard of the St. Louis Fed, like he's so super hawkish that they're going to do 2 rate hikes in 2022. Whoa, wow. 50 basis points. So 25 and a 25, because now all these central banks move incrementally. You're talking about what, a $25 trillion economy, and you're looking at 50 basis points, and you really think that's going to have any impact? The other thing I've been trying to explain to you is that interest rates are only going to go down. Look, they've been negative in Europe for a long time. And as long as we have a high level of fiscal policy in action, which I said that's not going to come down, because the major drivers of fiscal and government spending and the deficit, in fact, You're talking about Social Security, Medicare, Medicaid, and defense. Those four things. None of them are going to be cut. The Republicans will never cut defense. Even the Democrats won't cut defense. And nobody's going to cut Social Security. They might talk about it. Maybe at some point down the road they will, because of this phony, false, narrative that it's going to run out of money, which is pure bullshit. It can't. But who knows? But for the the near term and the medium term, it's just not going to get cut. And those things, those four things, Social Security, Medicare, Medicaid, and defense spending, comprise the bulk of government spending, and they're going up every single year. And as long as we have these massive flows into the financial system, right? It's supply and demand. You got massive amounts of money supply going into the financial system. Rates are going to come down. So let the Fed raise 2 times. And you're going to you'll get some volatility in the markets. But every time that happens, they are handing you a buying opportunity. I mean, to get all freaked out and to start saying, oh, it's a bear market and this and that, when you have unprecedented levels of government spending, not just here, everywhere, man, everywhere. I don't see one country, if we're talking about major industrial countries, I don't see one country going into fiscal austerity right now. None of them. None of them. So you have this financial system globally that is awash with capital. There is no way rates are going to be sustained upward and upward and upward. No way. So to get all freaked out about this, I wrote in my report today, by the way, the report is out, it's Monday, you can sign up for it, go to pitbulleconomics.com. I wrote in my report again today, and I've been telling my people this for a long time, you have to absolutely disregard any time the market sells off based on something a Fed guy says or Powell says or monetary policy related. That's just an opportunity. Now, if they come out and say, hey, we're going to balance the budget, and they start doing things like that, and again, that can't happen unless you make major cuts in those 4 items I talked about, or really, really raise taxes. I mean, really, really raise taxes. And you see how hard it is right now for Biden to push through his measly, 1.2 trillion Build Back Better. It started out as a 4 trillion. It's down to, he can't push it through because of the resistance on increase in taxes. So, I mean, it is what it is. You can allow yourself to get freaked out every time, and you could listen to these idiots on TV saying, oh, it's a bear market because the Fed is, they're buying 15 billion less a month in treasuries and MBS. I mean, come on. Are you stupid? Really? You listen to that stuff? It's unbelievable. Anyway, that's it for today. The report is out. Go to my website, check it out. 30-day free trial, pitbulleconomics.com. See you tomorrow. Bye.